Everything in this video is not intended as financial investment advice and is for educational purposes only. I'm Josh Olszewicz, head of research at Valkyrie, and let's take a look at the midweek market update. This week, perhaps more important than usual, as we have a CPI print tomorrow, as well as a long time coming Ethereum protocol. I'm going to use the word change. I hesitate to use the word upgrade ever, but it is an upgrade for those who have been staking on Ethereum, as their staked ETH will now be liquid and have the ability to be unlocked. I'll go over that in a second, but let's start with a real-time inflation estimate called Trueflation here, and where we think CPI might be headed tomorrow. Expectations continue to show a decline in inflation, depending on the various measurements and the ways we measure it, and which statistical massage we want to use. But the way Trueflation measures it, we've continued to see a decline in line with CPI. Now, Trueflation is far below CPI last reported. And much like this February-March period where we sort of plateaued, now we're seeing a rise again in this data set as far as year-over-year changes. So I think everyone is looking at data like this. They're looking at used car sales data. They're looking at various other data points that are kind of hinting at this fight isn't over just yet. Jobs numbers show a super tight labor market still, so we have room to run as far as hiking if necessary based on that measurement. Lending environments in the United States at least appear to be tightening, so there are a lot of moving parts going on in various sectors and industries that may help keep inflation stickier for longer. Right, so that would lead to higher for longer, and higher might just be 5.25 on rates rather than 6.5 or whatever the probabilities were a month ago. Now, if we look at expectations, CPI tomorrow 5.1%. Core, however, rising based on forecast here. That may be problematic for risk assets. Bitcoin likely will get caught up into that narrative tomorrow, not necessarily on an ongoing basis, but especially with all of the bullishness we've had over the past week. If we need a reason to pull back, there's a reason I can see coming. Now, if we look at rate probabilities, we are still pricing in a probability of another 25 basis point hike and then a series of cuts. I don't necessarily agree with the reality of these probabilities, but these are the probabilities. So if we do see a series of cuts, expect Bitcoin to do even better. Expect risk assets to do better. The other argument is, well, they're not going to cut unless things are truly broken and upside down, and that may hurt risk assets, including Bitcoin. It will certainly be an influencing factor, no matter what happens, but Bitcoin digital assets have really outperformed most of traditional markets in Q1 and even into the early days of Q2 here. So we'll see how these probabilities adjust tomorrow. But knowing what we know about the CPI forecast, if the actual data is in line with the forecast, I wouldn't expect probabilities to necessarily move around too much. Now, looking at the S&P, again, the S&P traditional markets haven't moved too much in aggregate, especially relative to digital assets. Digital assets have outperformed. Over the past week, I pull up my watch list and anything crypto is massively outperforming S&P. However, we still have a potential chart pattern here that has no basis in reality, especially if we have a recession of any kind. But it, based on technicals, is pointing to 4,500. I don't really see anybody talking about this. That doesn't mean that people aren't talking about this, but this is still a possibility. Again, no basis in reality, just technicals, as this would still qualify as an inverted head and shoulders chart pattern structure, to me anyway. So we'll see what comes of this, but S&P doesn't look like it's bearish at all. It's certainly neutral. It's leaning bullish, and that has helped Bitcoin here, as Bitcoin's just a runaway freight train relative to what's going on in the S&P. What's also helped digital assets is a decline slowly but surely here on DXY, especially if the US gets closer to ending hikes relative to the rest of the currencies in this basket. we may see relative weakness here that helps drive Dixie lower and then helps drive anything priced against the dollar higher. Again, based on technicals, there's a potential chance that the DXY has a severe decline as it has historically in 2017, in 2020. Those were times when cryptocurrencies, digital assets, Bitcoin specifically did extremely well in those environments. And trend metrics, trend technicals, the cloud here suggesting bearish rollover. The parabolic euphoria of the DXY that we had certainly came to an end here. Another chart pattern, Eiffel Tower in here as it's known. And now we're setting up for this potential inverted cup and handle, which again, all these chart patterns, you just measure the depth and project that to where you think the price is going to go. And that's where we get this range of 90 to 95. It says nothing about speed, but should this happen, as it has previously, over the course of months, then that should add additional fuel to long-term rallies for digital assets. And as long as we're on the topic of the dollar, let's talk about stablecoins for a second. Tether in the orange here, written off for dead by many several times, continues to just be anti-fragile in ways that the darling USDC is not in the yellow here. USDC having a bit of a crisis of confidence after that SVB reserves fiasco where they had 3.3 billion there. Now, I certainly don't blame Circle for that. I mean, I think they did the right thing, spreading those deposits out. They just happened to choose a bank where that was a bad place to do it at the end of the day. And they have certainly seen an outflow significantly after that event. Justified, I don't know, but it is what it is. They're now seeing circulating supplies flatten out, which may indicate people are getting more comfortable using USDC again. But Tether continues to just mint, back to nearly, above 80 billion at this point. So Tether doing extremely well. Binance USD can only go to 0, so that's what will happen. It will not be issued in any quantity ever again. Can only be redeemed, and then DAI in the pink here is a DeFi stablecoin, which largely relies on USDC as collateral. And that one has really failed to pick up steam. Maybe if DeFi takes off again, we can see things like DAI do well, but with USDC and USDT directly plugged into DeFi, there's kind of a less of a need for DAI to exist, this MakerDAO token. Yes, you could argue it's in a way decentralized, but at the end of the day, if most of the collateral is a centralized stablecoin, how centralized is DAI really? That's always been my argument. Stable, yes. Decentralized, not quite. Looking at Bitcoin's on-chain activity, we continue to see a strong rise in transactions per day in the orange here, breaching multi-month highs back to basically before the Chinese miner exodus. We're starting to see warming of attitudes to Bitcoin in China, which to me is strange considering how anti-digital assets they are, thanks to their own CBDC. Admittedly, most of that warming has been in Hong Kong, which is, for all intents and purposes, China light on regulations relative to crypto. We're also still seeing significant ordinals and NFT activity. We're seeing significant Lightning activity, Lightning Network Layer 2, and all of that collectively is helping fuel this on-chain activity, along with price, obviously. Active addresses also slowly but surely bumping up here. So this is exactly what you want to see when prices are rising. You want to see sort of a reason or rationale behind that. You don't want to see on-chain activity flat or declining. You don't want to see the market basically telling you no one cares about this other than trading sardines, right? Nobody cares about this other than speculation. This is more than that. There's utility going on here other than just speculation. Flipping gears to technicals, we've had quite the rally on the weekly here. The three previous weekly candles basically closed flat. We were setting up for a potential tri-star top. We can look at chart patterns, candlesticks, candlestick patterns. This is what this qualifies as, along with trend metrics. So we're still on track for this multi-month inverted head and shoulders playing out chart pattern. It sounds silly to say it out loud, but that's what they're called, inverted head and shoulders, with a target of 30 to 34. We also have this trend average called the Kijun on the cloud here, which is basically saying there is significant resistance at 32,000 or thereabouts. So I do expect some pause around that level. I don't expect this to just keep going infinitely here. Eventually we're going to hit some sort of bump in the road for whatever reason, but technicals are pointing to 32 in the near term. Now let's say down the road, within the quarter, we get inside of this weekly cloud, then we can start talking about this 42K level, but we have a long ways to get there. We could tap 32, retrace to 25, stay at 25 for a bit, and re-enter the cloud at around 25, right? I could easily see that as a potential. But we've certainly staved off any bearishness in the near term. On top of this, multi-month inverted head and shoulders, we also had this megaphone pattern, which was pointing higher. Again, all I'm doing is measuring the depth of these patterns and projecting it higher. So measuring the depth of the megaphone, we get a very similar target to that inverted head and shoulders target, somewhere between 31 and 33. So we're getting close to that. Now, it doesn't mean we're going to enter that zone a penny in and instantly reverse to 25. Very much an if this then that, because we may chop around in the 30 to 33 zone and, form some sort of other trend continuation pattern and keep going. Support to the downside for me is at the yearly pivot, 26.7, at the 200-week moving average, 25.7, as well as the key June here, which is, again, that red line, very similar to the weekly, acting as a support level on the daily now. So realistically, 25.7 is the support line in the sand anyway. Zooming way in on the 4-hour, this was the weekly TriStar. This was the weekly where we were flat. Zooming in on that, there was a brewing pattern here known as an ascending triangle. Again, just measuring the depth, projecting that higher, you get the exact same target, thereabouts 30 to 31. And we tapped that briefly today. One other important thing about all these chart patterns, when you see them developing, it's important that you do see as well a decline in volume. That certainly helps the case for that consolidation. So not only do we have the decline in volume over that time period, we also had an on volume breakout. So when we broke the horizontal resistance here, we also had a strong pickup in volume. That's exactly what you want to see, textbook stuff from a chart pattern perspective. And then on the weekly, historically, if we're talking about where would this rally pull back, most of the time, 2017, even 2014 and 15, certainly 2018, 2019, we see when we do rally over a long period of time, we do see a retracement typically to the 20-week moving average. Most of the time, not all the time. We did not see that in 2020, 2021. We certainly saw it in 2022 on the down bearish rally there. Did not see it on this 2019 rally. So we don't always see that, but it's certainly the level I'll be looking to for a reasonable pullback. And this will move up over time, obviously, but another support level to watch closely. And if we zoom way out long term, this looks great as far as, to me, looking like it is closer to the bottom than the top still, based on the power law corridor, based on where we sit relative to halving, based on drawdown recovery periods. All this is pointing to the current rally making complete sense for a bottoming process in the making here. So Bitcoin all in all looks extremely strong still. It's got the narrative behind it. If there's any crisis of confidence in any banking sector in the next couple months, that'll only help Bitcoin. If rates pause or relax a little bit, that'll help Bitcoin. I think the worst headwind we could see is a recession and then risk assets just turning over violently, or some sort of geopolitical tension ratcheting up between China and Taiwan, oil prices going insane, stuff like that. But I even think the debt ceiling debate is bullish for Bitcoin because it illustrates that it's completely outside of all that nonsense and the eventual destruction of the purchasing power of the US dollar. And that's where we're headed. Flipping gears to Ethereum, we've got the protocol upgrade, as it's called here, Shanghai and Capella, coming within the next day and an hour on the 12th at 5:49 p.m. EST. That's the estimated time here. Outside of US equity trading sessions, I guess, but still in US daylight hours. Now, there's been a lot of discussion well in advance of what will happen with all this ETH potentially that gets unlocked. Glassnode put out an article today that goes over this really well. It's extremely long. I won't touch on any of it in the video. I'll leave it in the description of the video. But they kind of go through various scenarios and why they think XYZ may happen. I don't think anybody knows for certain what's going to happen here. The first risk is protocol risk, which is extremely minimal. It's been tested twice, this upgrade, in various testnet environments. It's probably going to be fine. The big thing is definitely the potential selling pressure from a supply unlock. And I think that's certainly what's been holding ETH back here price-wise. Very kind of lethargic, unsure, refusing to break out. You're probably seeing people hedge their staked ETH, things like that. As far as on-chain activity goes, picking up slightly here with transactions and active addresses. That was the monthly. If we go to the weekly, again, it's a little noisier, slightly up, certainly holding at levels historically that have been significant. So it's not like all of the activity is just gone, but it does feel to me that ETH is sort of just waiting for this liquidity unlock to be over with. And if we look at price, it hasn't really done much, arguably since it was last here in May. August, but realistically when it broke down in May 2020, that's when it was last up here. And since the proof of stake transition, it has not provided significant returns, maybe from what most people expected relative to the supply locking mechanism and the burning of transaction fees. It hasn't really mattered too much in the grand scheme of things. Price still very close to that level when that transition happened. So based on technicals, if everything is a success and we don't see significant selling pressure, we may see a nice jump in Ethereum because it really has been held down for nearly a year. And again, just measuring the depth of the range projecting upward, we get a 2,500-ish, 2,700 target. The unstaking process, the unlocking process, may take well into May. So this may not be a simple one and done event from that perspective. The good news is we'll see everything happening on chain. This won't be a secret. We'll see everything moving around. But in the near term, it's a bit of a question mark. Now you could argue maybe there's another rising wedge here, which would point to a bearish reversal, but ultimately, price-wise, if it's back into the range, it's probably not going much of anywhere other than somewhere between 1,000 and 2,000. I don't think we're going to see a massive sell-off if we do see one. It helps that only 15% of the total circulating supply is currently staking. It helps that as ETH gets unstaked, the staking rate actually improves. So eventually we're going to hit an equilibrium where it's just going to make more sense to keep staking at 4.25 or 5.25 or whatever the endpoint ends up being than unstaking your ETH. So not much to say on ETH on that front, but in the near term, again, relative to BTC, it has really had the pants smoked off of it because we have really taken a turn outside of the historic bullishness we've had on ETH BTC and just kind of really just been, like I said, lethargic. And based on technicals, 0.558, certainly a reasonable level on ETH BTC here. So it should be an exciting week. Should be plenty of volatility here. The rest of the week, we've got banking earnings as well. So that's all for this one. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.